The year was 2014. Shake It Off was topping the charts with Taylor Swift's transition to pop music. People were doing the Ice Bucket Challenge to raise awareness for ALS, and Kim Kardashian broke the internet with a single picture. Also, and more importantly, the home prices here in the Halifax area were half of what they are today. That's right, in the last 10 years, home prices have increased by 118%. That's a better return than investing in the S&P 500 over the same time period. All right, welcome back to my channel. My name is Greg Pierce. I'm a local realtor and investor here in the Halifax area on the east coast of Canada. And today we're going to be breaking down year-to-date stats for our market here, starting from January 1st, 2024, all the way through till the end of September, and chatting a little bit about how we got here and what the last 10 years looked like. Now, before we get started, if you're interested in setting up a one-on-one call with me, please click in the Calendly link below. I'd love to chat with you and answer any real estate related questions. No strings attached. Whether you're looking to buy, sell, or invest, I'd be happy to help you out. So as mentioned previously, home prices here in the Halifax-Dartmouth region have more than doubled over the last 10 years. That was supported by some massive growth during the COVID period, but that compounding appreciation happens in most real estate markets, and that's why it's still considered one of the best investments. So back in September 2014, the average home price was $264,000, and now we're looking at $576,000. So a huge jump over those 10 years. There's been ebbs and flows, there's been peaks and valleys, but over time, it is a phenomenal investment, and you need to go through those highs and lows, and that's really what real estate is all about. So I think it's important to note that real estate's been an extremely hot topic over the last few years with changes in interest rates. Inflation has been highly talked about, and the housing crisis in general, not just here in Halifax, not just here in Nova Scotia, not just here in Canada, but across all of North America. This is something that has become an extremely hot topic, and it's really important to get your information from local experts and people that can help break down what the numbers actually mean. So that's what I'm here to do today, because there are a lot of headlines that you can read that can be scary or influence your decisions. And if you don't have the right information at your fingertips, you're not going to be making the best decision for you and your family. So this is what I'm here to break down for you today. So first, we're going to be looking at sales volume. So far in 2024, we have seen 4,028 homes sold in the Halifax-Dartmouth region of Nova Scotia. That is up 7% from this same time period last year. So it may seem like it's quieter, and again, that's my point, is don't just read into a couple news articles or what your neighbor told you. Get the facts. So we are seeing a 7% increase from the same time last year, and despite higher interest rates and inflationary periods, buyers are still extremely motivated to be buying and transacting real estate here in this area. So don't let that fool you. Make sure you're digging into the stats and getting this information from people like myself. All right, let's switch over to the average home price. So here in the Halifax-Dartmouth region, the average home price is $576,669. That is a 118% increase over the last 10 years. And more importantly, on a closer scale, 3.5% increase from this same time period last year. So that is still a strong appreciation growth. I do expect these numbers to transition into a higher appreciation volume because of lower interest rates and still a huge housing shortage. Now, the average days on market has climbed a little bit up to 32 days on market. Again, these are averages. Some are selling much faster, particularly in that sub $550,000 price point. And then some are selling longer, whether they're in tougher areas, tougher neighborhoods, or just higher home prices. This does suggest maybe a little bit more patience required on the side of sellers. And from a buyer's standpoint, it means they're getting a little bit pickier. They're taking longer to typically decide, which leads me to my next point, which is that inventory is at 2.6 months of inventory currently. Now, that is up from 2 months of inventory last year, but if you've watched these videos before, you know I like to break down what that means. So this is still a strong seller's market. Anything less than 4 months of inventory is a seller's market. Balanced happens between 4 to 6 months of inventory, and then anything above 6 months of inventory is considered a buyer's market. So this is really good news. If you're a seller and you're still looking to offload your property, you're still going to get a competitive price. If you're a buyer, it's gotten a little competitive. It's not as bad as it was, and likely better than it will be, because interest rates dropping is likely going to mean more buyers coming to the surface, especially with all of the other government programs that are be putting in place, like the 30-year amortizations for first-time home buyers. And lastly, there's 1,110 active listings as of the end of September here in the Halifax, Dartmouth region. Now that's a decent volume. Listing inventory is starting to increase a little bit, which is good. This is healthy. This is good for the buyers to have more options to choose from. And it also helps sellers in terms of having comparable properties on the market, particularly if you're positioned towards the top end of that segment. Now, those markets are all broken down into individual price points, so there is less to choose from at the lower price points, because those get scooped up very, very quickly, and at the higher, they're sitting a little bit longer. So what does all of this mean? Well, really, when you look and break this down, we still have very low inventory on the grand scheme of things. We have higher interest rates than we're used to over the past few years, but historically they're very great. And then average home prices are still continuing to climb, despite what most would consider to be a challenging year from an economy standpoint. We're battling off recession. Our GDP growth isn't very good. Inflation numbers were high. They've come back down in recent months, and interest rates are starting to decline. But really, the projection is that 2025 is going to be a year where we see really good growth. And then 2026, I think, is really when things are going to take off. So if you're looking to buy and avoid some of those higher home prices, I think now is a great time to get your foot in the door and buy a property. Yes, your interest rate might be marginally higher than if you were to wait another 6 to 8 months. Having said that, home prices are likely going to be on the rise as well. And it's always better to buy a lower house price with a bit higher interest rate than the other way around, right? They always talk about date the rate, marry the home. This is really important to take that into consideration and not get caught up in the FOMO. And when all the excitement happens with the lower interest rates, all those other buyers are coming to the surface and you're now in competition with them, which is going to drive home prices up. So thank you so much for tuning in. I hope you took some information away from this. And remember, always break down the information that you're given. Don't just go off of some news headlines or what your neighbor told you. When making such an important decision like transacting with real estate, it's important to get the best information possible. So thank you so much for tuning in. Please like this video, tap the subscribe button, and hit that notification icon so you can be informed anytime I release new content. Thanks so much for tuning in. As always, I'll see you on the next one.